morning. Welcome to CurrencyChange Daily Markets Update on Thursday, the 7th of November 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, your local solution for international payments. This is a key day today in the market for this week. In the US, the economy could have slowed down in the third quarter. The data expected at 2% versus 2.5% in Q2, indicating the US expansion lost momentum prior to the partial shutdown of the federal government. Economists project a report of these figures for today. The main reason seems to be that there were a smaller gain in home building and also due to a pickup in mortgage rates and a narrower trade gap, which explain this slowdown. The Federal Reserve's policy of seeking to drive down the US unemployment rate seems to be effective, and the level of slack in the economy justifies an accommodative stance, according to two separate papers released today by top Fed officials. William English, head of the Division of Monetary Affairs, wrote that the strategy of not raising interest rates if unemployment is above 6.5% has provided effective stimulus, and that an even lower threshold could be helpful. There are increased talks of a potential reductions in the Fed's unemployment threshold, above which they are not prepared to consider raising rates. Currently at 6.5% for the unemployment rates, recent Fed research suggests it could advantageously be reduced to 6% or even 5%. This had some negative impact yesterday on US yield and on the US dollar. That's why we had the slight rebound on euro dollar. In Europe, the key event of today, Super Mario Draghi must decide whether it's time today to cut interest rate by 0.25% to 0.25% or leave them unchanged at 0.5%. We do not expect that, and few people do expect this to happen, because the ECB will probably wait for more data, including in staff forecasts for growth and inflation, which are scheduled for publication in December. The central bank will announce its interest rate decision at 12:45 UK time in Frankfurt, and then there will be the press conference at 1:30 p.m. UK time, not to be missed. This suggests some upside risk for the euro, as the decline since the inflation data came out last week has overshot the correlation with forward points on the euro, so there is a risk for euro to go higher. In UK, Halifax said British house prices climbed for the 9th month in October, adding to signs the recovery is gaining momentum in the UK real estate market. Today's Bank of England MPC meeting should be a non-event, but there are some expectation building of a more hawkish tone in the QIR next week. So if the euro does benefit after the ECB meeting this afternoon, there is potential for sterling dollar to test the recent resistance level at 162.50 roughly before the end of this week. In terms of live exchange rate, we're currently trading on euro dollar at 135.18, stable. Sterling dollar 160.87. The rate was slightly higher against the dollar after a government report showed yesterday the UK industrial production slightly better than expected. On sterling euro, it's absolutely unchanged from yesterday at 118.96. There was no major news, and everyone expects the ECB event this afternoon. On sterling CAD, stable also 167.39. Sterling Australian dollar 169.49, stable, and sterling New Zealand dollar the same at 191.96. Economic agenda for today, UK time, first key event at 12 o'clock, the Bank of England interest rate decision, expected unchanged at 0.5%. Then at 12:45 UK time, ECB interest rate decision, expected bias at unchanged at 0.5%. 1:30 ECB monetary policy statement and press conference by Mr. Draghi. 1:30 we'll have the release of the US GDP expected at 2%, and also the weekly jobless claim expected at 335k. And then we will have, these are the key events for today. If you require further information, please visit now CurrencyChange.com. You can open an account for free with us with no obligation to exchange to cut the cost of your international payments, or you can call us on +44 0207 373 2686. Have a nice day.